Joining us now is Corey Diaz. He's the co-founder and CEO of Anfield Energy. Thanks for coming in today.
Thanks for having me.
All right, so you've got this hub and spoke model in the United States, in 3 states, to produce uranium and vanadium near term, intermediate term, long term as well. And the core of this strategy is the Shootaring Canyon Mill. So pull it all together for us and give us an overview.
Sure. So as you mentioned, our strategy is underpinned by the Shootaring Canyon Mill. We have assets in both Utah and Colorado, which would serve as kind of near to medium term production opportunities for us. The Velvet Wood mine in Utah is likely the first feed into the mill. The West Slope assets that we picked up back in early 2019, those are going to be the second source of material going through the mill. And then Slick Rock, which we acquired from UEC in a swap of assets earlier this year, that'll be the kind of the more intermediate opportunity for us when it comes to production.
Now, the most immediate news from your company was this week, where you engaged an engineering firm. They're going to do a reactivation proposal for Shootaring. So, can you describe what kind of work they're going to be doing?
Sure. So, PSC will be identifying the assets, the existing infrastructure, which pieces of equipment we can keep and refurbish, and then which pieces we can replace. Alongside that, they're going to be designing a new vanadium circuit for the mill. There's been no vanadium circuit on the mill, but we need it because we've got a lot of vanadium-rich mines that we're going to be putting through the mill. We're also looking at the idea of procurement. So PSC is very strong on the procurement side, so they'll help us identify and find vendors to provide the materials that we need for the mill. And finally, I think it's important to note that this is the last step, engineering step required before we actually physically start refurbishing the mill, and we'll be ready for restart looking at 2024.
So you said, Corey, that refurbishing the mill will cost about $25 to $30 million. So what are your options for financing?
Well, I think we've got a couple of options. So we certainly can do it through equity, we can do it through debt, or we can do it in some kind of combination. We've had offers of project finance already, and so we're comfortable that we'll have the money once it's time to put money, into materials.
Right. All right. Now, you say that refurbishment will likely take about 18 months. So are you aiming for production late 24, early 25? And also, second part of that question is, do you need to see a certain uranium price?
No, I think it's correct. We're looking about a 2024, it might slide into 2025, but our aim is 2024 in terms of production. We're not concerned about the uranium price at all at this point, given the trajectory of the uranium price, given the macro environment. We're very comfortable with restarting the process now when it comes to production.
Now, in terms of your projects and preliminary economic assessments, you want to update a couple of them. You want to get to another one. So we were talking Velvet Wood, West Slope, and Slick Rock.
Yeah.
Update us on those 3.
Sure. So the Velvet Wood PEA that we put out in 2016 didn't incorporate any vanadium at all. Although there is vanadium there because there's past production. There's 4 million pounds of uranium produced at Velvet Wood and 5 million pounds of vanadium, so we know it's there. So we're going to update the PEA to reflect a vanadium resource at site. Secondly, with West Slope, we put out a resource report early in 2022. Our aim for the West Slope is to add economics to that report. So that report incorporated 4 of the 9 mines, which reflect what we have at West Slope. And so the aim is to, first of all, put the PEA numbers to the 4 mines that we have already done, and then look at the opportunities on the 5 remaining mines, looking at economics, putting together resource reports for 1 or more of those, and then adding economics to those later on in 2023.
So lots to do. You're going to be busy, and you've been busy lately. You've got a tuck-in acquisition strategy. You picked up more than 100 claims on the Artillery Peak project area in Arizona. So explain your strategy in terms of adding more to what you have.
Sure. So I guess our strategy is 2 prongs. So the first prong we've talked about, the production coming out of Colorado and Utah underpinned by the mill. Our second phase looks to creating a longer-term pipeline of resource that we can put through the mill once we've exhausted the mines that we have in Utah and Colorado. We did pick up the Artillery Peak claims. There's some historic resource there. The aim is to grow that to 10 to 20 million pounds in order to have a much longer life resource and opportunity in the production space.
Now, Corey, when you eventually start producing vanadium, We know that it's usually used as a steel alloy, but it's also used in vanadium redox flow batteries in energy storage. Is that your main focus?
Yeah, that would be much more interesting to us, appealing to us. I have a soft spot for clean energy. I've worked in clean energy in the past. I think it's important when we're looking at renewables that they do need to have some kind of energy storage source in order to create kind of a pseudo baseline power opportunity. I think, given that renewables are kind of slow, sorry, not slow, but they are more intermittent. I think it's important to have some kind of storage opportunity, and I think the vanadium flow battery is something that could be a great equalizer in the sector.
My understanding is that they're good for long duration, for say 12 hours, as opposed to for maybe if not longer.
Yeah, I mean, these vanadium flow batteries can run a city. They're not lithium-ion batteries that you put in cars. These are batteries for kind of large-scale opportunities. So I think from that perspective, I think the idea of setting up a grid, that's also incorporating vanadium flow batteries means that you can run, towns, cities. You can run industrial offices or spaces. I think it's a critical part of the mix when it comes to, electrification of the grid.
Lastly, Corey, you think your stock is undervalued. A lot of CEOs think that, but compared to peers, and I've seen the chart that you put up, you compare yourselves primarily to 4 different kinds of companies that are similar. So what's it going to take to get the markets to understand your story, and why do you think you're undervalued right now?
Well, look, I think we're not as well known as a lot of the other stories. I think that's a big part of it. I think that we compare well when we look at our asset portfolio to other 4 near producers, but yet our market cap is probably an 1/8 of the smallest one. So I think there's a significant opportunity for investors to see our stock appreciate to the point where it meets at least the smallest of our peers. But certainly the upside could be significantly higher than that, closer to 20 times. But I think that given our story, given our asset base, given how close to production we are, given how simple and straightforward our path to production is, I think we should be valued higher than where we are today.
All right, great stuff. We'll be watching. Thanks, Corey.
Great, thanks for your time.
Okay, Corey Diaz, co-founder and CEO at Anfield Energy.